MarketStrategy.com.
Hi, this is Chris again, looking at the upcoming Wednesday, August 13th trading session. I have the economic calendar in front of you. We have a plethora of numbers, just an absolute ton of numbers coming out for the session. But that being said, there's only some that matter. The first ones that come out are in Australia, none of which should carry any major driving momentum one way or the other in the marketplace. We do have industrial production coming out of China, but quite frankly, we think that the markets are probably going to somewhat ignore this number. It is important in the sense that if it's a massive miss, that could set the tone for the day for risk appetite in stock markets, etc. But really, there's no way to directly trade it, so it's more or less just an attitude that the markets will come up with. The first number that we're truly paying attention to is the German Consumer Price Index, slated to come out at 0.8%. That being the case, the euro itself is rather beat down, and it has been oversold to say the least. With that, we feel that a better than anticipated number could be the catalyst for the euro to drive higher for the session. Looking later in the day, the next thing that's caught my attention has been in the UK. It's the employment change numbers, 3-month number, expected to have 270,000 jobs added during that time period. That of course can move the British pound, which closed above the 1.68 level for the session on Tuesday, which is a little bit of a level that matters. And the FTSE, which basically needs some type of catalyst or help to get it to go higher. Probably more influential to the British pound, though, so certainly worth paying attention to. Unemployment rate comes out as well, anticipated to be 6.4%. Jobless claims probably will get lost in the shuffle, but something to at least pay attention to. Looking at the calendar as we continue to go later in the day, we have advanced retail sales coming out of the United States. This will more than likely affect the S&P 500, the stock indices in the U.S. The S&P 500 is the one that we're watching at the moment, though, as it has been walking up a trend line and has proven that trend line again. Better than anticipated numbers could send this market looking for 1945 and perhaps break out to the upside, which would be very positive. And then after that, we have a regional number in the sense of it's only going to affect one particular market. Crude oil inventories, it is an important number for WTI, or light sweet crude. We have less demand than anticipated. The 96.5 level will get broken to the downside, sending the market to 95 and perhaps even lower, because the Brent market sold off rather drastically on Tuesday. So we are kind of on the precipice when it comes to oil. Looking at the aforementioned S&P 500, you can see that we did fall, but we turned around and formed a little bit of a supportive candle. So because of that, a break above the 1945 level would send this market much higher. The advanced retail sales probably will be the catalyst one way or the other. Even if we fall from here, though, we're looking for a buying opportunity lower as long as we're above that uptrend line. Looking at the euro dollar, you can see the euro dollar did fall during the session but formed a beautiful hammer, and therefore the German numbers coming out can influence this market to bounce probably to 134.5, possibly even 135. That's about as far as we see this market going, though. Quite frankly, it's in a downtrend for a reason, but a bounce is needed. I mean, we're getting a little oversold at this point. Looking over at the FTSE, again, this is a directionless market, at least in the last 24 hours. Negative kind of bias to it. 6,500 below is supportive. 6,700 above is resistive. Those employment numbers come out of Britain better than anticipated. 6,700 will probably be targeted. This market just needs good news at this point. And finally, we look at the British pound. Nice day on Tuesday to get back above the 1.68 level. Good employment numbers will only push us higher, proving this area to be supportive. Even if we fall from here, 1.67 is about as low as we anticipate this market to get. Quite frankly, it's just been oversold. 1.69 is probably a reasonable target for the short term, and if we can get above 170, we head right back into the uptrend again. With that, I've looked at the Wednesday, August 13th trading session.